Hi everyone, welcome back for another episode of Centrick Talks Property. Thank you very much for tuning in again. We're joined this time again by Marc from Me Financial Services, so thanks for giving up some more time, Marc.
Thanks for having me again.
We're going to talk today about Help to Buy because, again, it's quite a meaty topic. I don't think we could get it all into our mortgage episode previously. So a lot of questions firing around at the moment about Help to Buy. It's the new schemes come out this year in 2021, available for drawdown from April. I suppose we just wanted to get your thoughts and some advice really on Help to Buy. Go from there. So Help to Buy then. What's your viewpoint on it in the market, and what's the appetite like from first time buyers ultimately?
Yeah, I think there's certainly a place for it. I think if they just pulled the scheme away and there was nothing left, it's certainly plugging a gap.
It would leave a bit of a hole. Yeah.
Well, it's the low deposit first time buyers again. 2 years ago, 95% mortgages were quite easy to come by. But obviously now they're not. So it's definitely a gap that's there to be plugged for sure.
It's giving purchasers an option that's not there on the open market, so to speak.
Definitely.
Okay.
And a lot of people like a nice flashy brand new home as well. So
absolutely,
it's nice as well. But yeah.
So a few changes to the scheme this year in 2021. Do you want to just give us a rundown of what a few of those might be?
Yeah, I mean,
or are?
It's effectively the same. It's not available to everybody now. So previously, someone could move and use the scheme.
It was available to second-time purchasers as well, wasn't it? Yeah.
Yes, exactly right. Yeah. So for movers, but now it's only for first-time buyers.
First-time buyers, yeah. Okay.
And fundamentally, it's the same. There's some restrictions in the amount that you can borrow or the amount that the government will allow you to borrow.
Yeah.
But normally that's going to be sufficient for everybody with the level that the government give you still, which is 20% max.
Yeah.
And you still need to put your 5% in minimum.
Yeah. So it's a minimum 5% deposit for purchasers, which is again where it comes into play if people have not got 10% deposit, which is probably the minimum out there on the open mortgage market at the moment.
Exactly, yeah. There's nothing really available with a 5% deposit at this point in time. Yeah, okay.
And it's for new builds only now, isn't it? Where I think a few years ago there was an option to buy you could be a second time mover buying a second-hand home, but over the last few years it's moved just into new builds. So there was a different scheme altogether a good few years ago, which it hasn't been around for a while, but predominantly it's new build. Well, it's new builds now. Yeah. Okay, and there's some caps on the lending now based on region. So
yes, that can all be found on the Help to Buy Gov site, but depending on your area. I must admit I don't remember them all off the top of my head.
I think the West Midlands is a maximum of 255, 600 or something like that. Yeah. I think the East Midlands is slightly more than that. So I think they've almost taken what the average house prices are in the regions and applied that. So
I think the scheme is there for first time buyers to help first time buyers get on the ladder. So generally a first time buyer wouldn't be buying a £1 million house potentially.
Yeah, of course.
So.
I think it was up to 600k before, which sounded outside of London sounds a bit wild. So people did use it.
Yeah, they did. Yeah, I think that was where the home movers came in really. If you're moving, you want to upsize to a 600k house, for example. You could do that, and you had the equity in your old house as well. I think that's the right place for it to be. I think the market generally, people are screaming for. I use the term affordable housing loosely. A house on the lower end of the scale, where in terms of price. I think it's positioned quite well from that point of view.
So a purchaser or first-time buyer can buy a new build, can put in as little as 5% deposit, which on some of the schemes we're working on is £6,000-7,000. So again, affordable, not wildly, not needing £20,000-30,000 to go to get onto the ladder. There's a bit of misunderstanding I feel in the market, or people are not aware about the equity sort of split at the end should you sell. Do you want to give us a bit of an overview on how that works?
So the big misconception that should be explained to you at point of purchasing your property, which perhaps sometimes isn't understood or whatever, is the bit that the government are helping you fund, the 20%, the equity loan. It's based on the value of the property when you come to settle it. So let's say you bought your lovely new home.
Easy maths.
Yeah, exactly. Yeah, I'll go easy maths again. Let's say you're buying £100,000 property.
Nice.
You're buying £100,000 property. There's 20,000 that effectively the government has lent you on an equity loan, and then the rest is on a mortgage and your deposit. So if that property is then worth £150,000 when you want to pay, say you decided actually the house has gone up in value, we've paid our mortgage down, so we'd like to actually pay the government back.
Yeah.
The amount that you actually owe the government is based at the market value of the property at the time. The
market value.
Yes.
Yeah.
At the time, yeah.
And they still have a 20% loan on that total value.
Exactly. So there's a lot of people that are thinking, oh, it's great, I owe the government that £20,000. What I'll do is I'll pay them off, I'll have the equity in the property, and I'll put that garage on that I like.
Yeah.
At the same time, there's people as well that are doing home improvements on their properties, and it's actually adding value. They might put another extension on or something like that, and the government are getting benefit from that as well.
Of course, yeah.
So a lot of people, where they can, they'll try to pay it off beforehand, before doing the work. But
talk to us about the loan then, I suppose, because it's a 5-year loan or grant, if you like.
Yes,
I think so. It's interest free.
So on your 6th year, you have to start paying interest back to the government. Basically, and then there's the £1 a month
contribution.
Contribution. Yeah.
Okay, fine. Yeah, and I mean, for me, I know again people are like, oh, I've had a few comments this week on some of the social stuff we've put out about Help to Buy. Oh, I'm selling my property now, and I'm reluctant because I've got to pay the government back. 20% of the profit I've made on the property. Yeah. But ultimately, you wouldn't have got on the market or wouldn't have, been in a position to buy that property had the government not stepped in and given you 20% deposit, which for our easy maths is the minimum of £20,000. So, it's horses for courses, I suppose. If you've got the option to not use it, then
it's all relevant. It's all relevant. The conversation that we're normally having with a client is, as long as they understand that and they're comfortable with that, you're buying something that is going to go up in value, hopefully, or has the potential to go up in value.
Track record shows,
yeah. So you're buying something that you will build equity as you pay off your mortgage. That's still the case. I wouldn't be feeling bad about it. But then a lot of people don't like paying back the government when you'd hope that they would just give you the money, but it's not like that really. It's the same with other schemes like shared ownerships and things, which I'm sure we'll cover off another time. But you're purchasing, if you like, a proportion of that property that you're hoping that is going to be owned.
There's another investor involved ultimately, and in this case it's the government. So
exactly, and it's relatively cheap borrowing, but you have to give the government back in terms of repayment. So most people at the end of the 5 years won't find it very inaffordable. But at the same time, we would always have a conversation, whereas if you can actually get 5%, now the market is opening up to 10% a lot more. Is there actually a little bit more that you could perhaps raise to look at? There's more properties that you could potentially consider.
If you can go to the second-hand market as well as the new build.
And at the same time, a lot of people, because of the way of the world at the moment and the prices of properties at the moment, are getting the family support from their parents or whatever.
Bank of mum and dad, as we label it.
Yeah,
absolutely.
Exactly. Or
cheap borrowing usually.
Exactly. So sometimes we'll have a conversation with the family unit, and actually, based on the fact that the government's going to take their slice at the end, actually we could probably stump up another 10%, or another 5%, or get to 10%.
And I'm assuming that's a whole nother topic that we can cover off at some point.
There's lots of
family
different
lending.
Schemes. Basically.
Okay, cool. So just, I suppose, to put that all into an overview of, if you're looking at Help to Buy, what should a purchaser do? What are their steps?
So the first thing that I would suggest is you go on the Help to Buy website. I'm sure we can put a link out
absolutely
for that.
And we'll get that on
register with a Help to Buy agent in your local area. So if it's the Midlands, then you can do that, and we can help you with that. You can help with that, I'm sure.
Yeah, of course.
Then you'll have to fill in an application to apply to be part of the Help to Buy scheme. Generally speaking, you can borrow 4.5 times your income. I think they cap it a little bit more when there's a government element built in or whatever. So you get that qualification done. speak to someone like yourself perhaps, or a builder, look at some properties that qualify for the Help to Buy scheme, and then they would just come to us in the normal way, or any other mortgage brokers are available, and get an idea of what they can borrow and what their lender's appetite is based on your circumstances, and then from there look for an agreement in principle.
Okay, so visit the Help to Buy website, basically register for I suppose it's like an application form, making sure you qualify, and the government are happy to, I suppose it makes sure you're a first time buyer, shows you what your maximum borrowing might be.
So the amount you're looking for, they'll just confirm if it's feasible based on the scheme.
Okay, brilliant. Then obviously go and find a property, which, as we said, a new build. So keep your eye out on the new build market. Speak to your local agent if needed. And then when you found the product or the property that you're interested in, that's where you guys would come in, I suppose, to start that application and hold their hand through.
Yeah, definitely. I mean, we can speak to you earlier before that whole process, or help you go through that process as well. A lot of the time when you start registering with builders and trying to look at properties and look at Help to Buy properties, they will obviously insist that you've gone through that process anyway.
Yes.
So they may either help you with that as well. But if you generally qualify for the scheme, fingers crossed, subject to credit scoring and things like that. It's fairly likely that we'll be able to place the mortgage for you as well.
Okay, cool. And I suppose just recap or summarise again. We touched on briefly the sort of the loan period and what that looks like. So just clarify, it's an interest-free loan for 5 years.
Yes, interest-free loan for 5 years. I believe it's the new scheme is 2% plus CPI, which might not mean a lot to a lot of people, but there'll be interest to pay on the 6th year.
After 5 years, yes. Okay.
And your normal mortgage payments will be all part of that. So we would help someone understand what those future costs will be, to understand what that would be from an affordability point of view. But at the same time, we'd work out a term that's suitable for your mortgage, standard situation, up to your retirement age, or anything from 0 to 35, if not 40 years, depending on the lender.
Okay, brilliant. And then options once they are in a Help to Buy mortgage and property. Obviously, they can sell the property at any stage. There's no restrictions around that. It's just that almost the government has a charge over the property for their borrowing. So if it is 20% and it's £100,000, again, they've got a charge over that property for repayment of that. And you can also buy the Help to Buy or the government out of that product as well, if you need to remortgage or find some extra equity somewhere. Yes,
you can. Yes. So if you say 5 years time, you decided actually what we'll do is we'll look to see if we can pay the government back. I believe you can pay a minimum of 10%. That's just effectively half of what the governments give you, or you would normally, if you could afford it, so what are saying that? If you could afford it, you'd pay the government off in full. So there are obviously restrictions in lenders that do the Help to Buy, but don't get me wrong, there's a lot of high street that obviously do it. But it may be you get to a place where once you've actually paid them off, you've then got a bit more flexibility on looking at the market and looking what options are available to you as well.
Which lender you go to next, exactly. Brilliant. And then if they were to look to pay the loan off, so to speak, I understand that they'd have to get an independent valuation done, risk valuation, etc.
So there's a association, if that's the correct word, called Target. So you would what you would do is you get an independent, what's called a RICS valuation, which is basically most larger valuers or surveyors will be RICS registered. So you get a valuation done on the property. There'll be a form that you fill in with Target, and we would help you with all of that as well. We do a lot of paying off of equity loans. And generally what would happen is you would send that valuation off to Target. They would agree that this is the open market value of the property. We're happy to go with that figure. And then whatever 20% of that is what you'd be expected to pay back.
And I suppose even, we're looking on the positive side that the capital value of the property increases over the 5 years or 3 years, whatever you like. But ultimately the government are in there. If the property goes down as well, down in value, then ultimately their 20% is only relevant to the value of the property at that point. So there is a risk to the government in putting in their contribution. So it's not to be frowned upon, I think.
No. it's cheap money. I mean, certainly for the first 5 years, it's cheap money.
Yeah, 'cause it's interest free for that period.
Yes, exactly. And then after that, it's it's in line with what you would probably pay
on a standard
for a sort of standard mortgage sort of setup, depending on the situation. Cool. So it's
and you, like I said, what people should be doing, I suppose, is having a conversation with someone like yourself or your team to establish whether Help to Buy is right for them.
Yeah.
Because like you said, if there are other options available through parents or other options, then that's something you guys would, I suppose, look at and hopefully allow them to make an informed decision at that point whether Help to Buy is right for them or not.
Yeah, I think so. I think new builds can be a bit hit and miss if people like them or not.
Yeah.
So something to think about is there may be a premium attached with them being brand new and shiny and everything like that.
Your warranties and your
exactly. So if there was a second-hand property out there that was perhaps slightly less expensive than a brand spanking new property, it may well be with the lower purchase price and with a little bit of extra money that you can put in, it may well be that you could take a 10% mortgage out, a 10% deposit mortgage out on the property, and have more choice of what you look for. So we'd always look at those options as well.
Yeah. So I mean, for me, I think Help to Buy is a great scheme. We've sold a lot of properties utilising it. I think there's been a lot of happy people that have managed to get onto the property ladder where they don't have other options or it just works for them. So I think it's a scheme that purchasers should look at. But ultimately, I think we're saying it's not going to be right for everyone, and some people don't like the terms and the T's and C's that are attached to it. But then that's where we can step in and help them look.
Exactly. Yeah. The only thing that's important to us is the client. So they're at the centre of everything. So we will tell them all of the options. And if the scheme is right and that's the way they want to go, then it's definitely a feasible way for people to get onto the property ladder.
Absolutely. Okay. Brilliant. Okay, Mark. Well, thank you very much for that. I'm sure that's answered a few questions for our listeners and followers. Do get in touch if there's any questions, guys. We'll happily put you directly in touch with Mark and his team at Me Financial Services. But again, thanks for tuning in, and remember to give us a like and subscribe. Take care, everyone.